Hey everyone, and welcome to Earnings Cheat Sheet for Friday, May 31st. It's Garcia, it's Carson. We're going to be taking a look at some of the key upcoming earnings reports to help you prepare for the week ahead. So Ed, that was kind of my Sports Center intro for today. I don't felt special just doing it, but what do you have on deck for us here?
I want to take a look at Crowdstrike, Samsara, and Ollie's Bargain Outlet.
All right, well, let's kick it off with Crowdstrike, shall we? The cybersecurity company is scheduled to report its Q1 earnings on Tuesday, June 4th, and we could take a look at that cheat sheet. Earnings are expected to climb 56% to 89 cents per share, and revenue is expected to rise 39% to 905 million. And here's why we're watching Crowdstrike. We're going to want to pay special attention to annual recurring revenue subscription numbers, and Crowdstrike stock is basing ahead of earnings. So Ed, Crowdstrike really emerging as a leader here in the cybersecurity group. It got a little bit of a boost after a recent trade conference where it seemed to get some positive feedback from customers and partners on their AI initiatives. So what are you going to be focusing in on here with Crowdstrike?
Yeah, I mean, Crowdstrike is one of the true market leaders. It really got going even before the market did last October. This is one of the last software names we're going to have for a while. I mean, this is one of the last big ones. And some of the software names we've seen in the past week or so have not turned out so great. So this is sort of a last chance to see how that'll do, and just, the guidance and, the ARR, the recurring revenue is really a sign about guidance, really is what it comes down to. And just want to see if Crowdstrike and really the software sector, if it can find its footing until the next big earnings cycle. Yeah, there's always going to be more reports, and there will be a few along the way, but it's a long way before we get ServiceNow and Microsoft to report their June quarter estimates.
All right, well, let's take a look at the chart then, Ed. And I'm going to just start on the weekly just to highlight some of the positives here. Crowdstrike's had pretty much a 100% run over the last year and nice triple-digit growth over the last few quarters. But switching over to the daily, not a great day today for Crowdstrike, or really software stocks in general, down about 9% here, but building that cut base with a 365 buy point. So what are your thoughts on the chart here?
Well, obviously, this is an example of why we talk about why it's important to pay attention to earnings reports just for the how it affects other companies. This was tumbling on Salesforce. It was tumbling on Okta. A couple more cybersecurity firms were reporting, still before this one comes out. So we'll see how that all plays out. But as for the chart, yeah, it's basing. It really sold off pretty hard today. Coming through the 50-day line, there had been a couple early entries that investors could have played with. Well, it's below those. Let's just put it that way. So that could happen heading into earnings. Obviously, people who bought it a long time ago, they can hold through this. This isn't that big of a deal. For those who bought, in the last several weeks, probably need to be, wanted to step out, especially with earnings coming in. Look, this can bounce back. We'll have to see. I mean, this is at an important stage. It just broke through a key level. Can it bounce back and then start making new progress, or will it have a longer period? Could it go, much further below that, or even undercut the lows of its base? I think that's going to be important because, again, as we both mentioned, this is one of the real market leaders for the past year. So if this one struggles, that's not a good sign certainly for tech names.
All right, well, speaking of tech names, let's take a look at Samsara. The software company is going to report its Q1 results also on Thursday, June 6th, and earnings are expected to swing to a 1-cent profit versus a 2-cent loss the previous year. And revenue is expected to climb 33% to 272 million. And here's why we're watching Samsara. Again, we're going to key on those annual recurring revenue subscription numbers. And as you mentioned, Ed, we're going to just see how these software stocks can really rebound after taking a beating on Thursday. And shares are also trading around a key moving average. So Ed, we've seen Samsara really kind of turn in some profits here over the last year. So what are you going to be focused on with this report?
Yeah, I mean, we're looking at the C because they're trying to eke out a small profit. Can they keep that going? And that's why that recurring revenue matters. This is one that, it's like a lot of expectations for it. It's done very well, but we'll have to see. This is also an AI play. This sort of does remote sensors of, monitoring sensors out there. So it's used in a lot of, Internet of Things kind of issues, but an AI play. Just want to see one of those end use cases because, again, AI can only, if AI can't make any money, spending a lot of money on it, and you're not, if that doesn't turn out great, then then that's going to maybe curb the whole spending train that we've seen. But this is one that's been a big mover in terms of strong growth, but it's also extremely volatile stock.
All right, well, let's take a closer look at the chart and starting on the weekly. And just want to point out from the fundamental side, Ed, as we mentioned, really turning a profit here the last few quarters, and those sales numbers looking really strong too, in the mid to high 40s. So we're going to be seeing if Samsara can turn in another great sales performance this quarter. But looking at the daily, you can see it tried to break out of a cup base and kind of rolled over here. And again, today, just getting beat up and closing below that 50-day line.
Yeah, a lot of these software names. And of course, there's Salesforce and these others, but also some other names in the prior week. There's been a lot of weakness. And this is also a stock that has really been tough to buy, especially from a traditional breakout. Yeah, it broke out, but then it rolled over. But if you look at prior breakouts, this has done it again and again. This actually, if we go back to a weekly, you can see it's hard to find spots. I mean, there have been some instances where it holds up, but even there, maybe like last June, but even then, ultimately, it came back to the top of the prior base. Like it took a few months for that to happen, and then it promptly went back up. So this is one that if you're going to buy, you buy on pullbacks, it seems like. So this one's been tricky. It's pulled back, but now there's earnings coming in. So this is just something, the character of a stock. While this earnings report is really good, it's hard to play this one. I think I've heard a lot of people, and that's not just me. A lot of people say, I've tried this, and it's like it keeps going up, and I keep on losing money on it. And that's just some stocks, and that's what IoT seems to be.
Let's go to the next name on our list, which is Ollie's Bargain Outlet, which reports earnings on Wednesday, June 5th. The bargain retailer is expected to see Q1 earnings rise 33% to 65 cents per share, and analysts expect revenue to climb 10% to 506.5 million. And here's why we're watching Ollie's. We're going to want to look for any comments that give insight on the state of that moderate income consumer. This one is also basing ahead of earnings. So Ed, we had some of the major retailers over the last few weeks. So what are you going to be looking at as Ollie's reports?
Yeah, I mean, Ollie's is a closeout retailer, so we haven't really seen that. We've seen, off-price retailers like TJX. We've seen the big warehouse chains like Costco, the big box discounters like Target and Walmart. So this is a little bit different. This is like when companies, go bankrupt or they get rid of things that they don't want to sell. They companies like Ollie's gets a hold of it and sells it at a pretty cheap price. Look, I mean, to a certain extent, these discounters have generally been doing well. That's a positive for them. That's not necessarily a great sign for the consumer. It's almost like if they're doing well and other retailers are not always a positive. So it's a double-edged sword when companies like Walmart says, hey, middle income people are coming down to buy at our place, but we'll have to see, because that could be a positive and a negative, what Ollie's has to say. But this one has turned out some pretty good stock gains, pretty good earnings gains in prior years. Last year was a good year for earnings.
All right, well, let's take a look at the chart, and I'm on the weekly here, Ed, and so we can say it's setting up in consolidation with an official buy point of 84.38 and retook that 10-week line last week. So what are your thoughts here?
Yeah, it's sort of been consolidating for several months. It's sort of like three consolidations side by side. It's sort of like interesting. Each consolidation is a little bit wider spread, but it's essentially the same consolidation. The relative strength line has deteriorated during most of that stretch because the market was going up. Now, going sideways, yeah, it's been up a little bit lately, but essentially it's sort of gone sideways. The RS line has started to go up in the last few weeks because the market's had a little bit more trouble. On a daily chart, you can sort of see it feels like, if it weren't for earnings, you could argue, hey, this was an early entry here when it got above this 80 level. You can see there was some resistance there. but earnings are coming up. So it's like, how much do you really want to be going into something like that? As you can see on the fundamentals, sales growth has accelerated for several quarters. So can that continue? The comparisons are going to get tougher. I don't think they're expected to do it, but yeah, we're seeing, and the earnings growth picked up in the last quarter. So nice growth there. But this one hasn't had a real lead, but it could be one, especially if we start feeling a little bit more uncertain about the economy, uncertain about consumers. This might do pretty well again.
All right. Well, that wraps it up for this season of Earnings Cheat Sheet. And if you want even more market analysis, be sure to tune into Stock Market Today with Alyssa Quorum. That goes live after the closing bell. And be sure to follow us on X or Twitter at IBD Investors. We're going to be posted a curating calendar of all the notable earnings coming up over the weekend to help you prepare. And thank you so much for watching, and we'll see you all next earnings season.